What's going on, everybody? It's Lawrence from financialthing.com back with another exhilarating Thursday evening live stream talking about everything to do with peer-to-peer lending, investing, the stock market, cryptocurrency, whatever else we want to chat about tonight. We're going to be talking about what was your first investment. I was kind of thinking about back when I started investing in, it was 2014. Just there are so many different options and alternatives out there now to investing. It just can become really overwhelming. And I was starting to think about what was my actual first stock investment. And I'm going to show you what it was. I'm going to show you how it fared over the time that I owned it. So I'd also like to hear from you. What was the very first stock investment that you ever made? And how did it do for you? So what was the very first one? Pop your thoughts in the chat and let me know so we can go through some of those and kind of look and see what you guys did. But we're going to be talking about that. We're going to be talking about what the hell is going on with the stock markets, the craziness. We saw the Fed yesterday release minutes from mid-December of 2021. And we'll see what they were talking about and also see why the stock market went crazy. Took a big dip and then bounced right back up again. And also bringing the crypto markets down with it. Also, things are looking very volatile within the crypto markets. We'll talk about what's going on with that. Take a quick look at the trading 212 portfolio. See how that has fared. And that should take us under an hour, hopefully, this week. Sure, always say that every week. But I hope everybody out there is having a great start to 2020. As always, if you can hit the like button, that really helps me out a lot. And, I know I was supposed to announce the winners of the holiday giveaway this week. I'm going to have to postpone it till next week because, honestly, it is on my list of things to do, which is somewhere on my desk, but I just forgot to do it. So that gives you an extra couple of days if you haven't either joined the Discord, which the link is in the description, or become a Patreon member. You can do that and enter the giveaway. Yeah, holiday giveaway. It's kind of a surprise what I'm giving away, but if you win, you'll find out. So that'll be something good. Let's say a quick hi to everybody in the stream. Invest22 is here in London. I believe Happy New Year to you. Colin Perry in the about to be snowy Peak District. Paul in Kenilworth. Peter in Leatherhead. Patty in France. Bonjour. Trying to think about any other French that I know. It's not coming to my mind. Près d'ici. Beef Tech. Chimpo Naughty, of course, is here in Cambridge. Darren. Stephen in Nottingham, which is chilly. Alan Stratford is here in Worcestershire. Mike Powell in Southampton. Aki Chap, of course, in Accrington. Arthur Atchison in a freezing Belfast. And Brian in Woburn tuning in. Nice to see you, John Day. Happy New Year from Nottingham. Annabelle Nyron back in sunny Spain. Hola, ¿cómo está? Peter Clark is here. I think already Cambridgeshire, yeah, Peter. And anybody else? John Morgan is here. John Morgan, you are a very famous lawyer in the US, by the way. I think you have the biggest law firm in the entire country. So you have a good namesake. And so let's get started. To everybody else watching in the future, I hope you enjoy the stream. Subscribe to the channel. Again, let me know what your very first stock investment was, as long as you can remember, going way back. Very first purchase. Whether you held it, whether you sold it, whether it was a good investment or not. And I'm going to show you what mine was a little bit later. And you'll be quite surprised. I was surprised. When I looked at the results, I was like, wow, it was very surprising. Anyway, let's get right to the news and see what kind of a thin peer-to-peer lending news this week. Some news about the FCA. The FCA rejected 1 in 5 applications for authorizations last year. I was surprised about this. I would have thought it would have been higher than the 20% rejection. That means that 4 out of 5 went through. So it said the FCA rejected 1 in 5, up from 1 in 6. So they've become a little bit more lenient. Maybe that's probably got something to do. Maybe the application quality has gotten higher and they've had to reject less. But there may just be less unqualified firms asking for regulation. The city regulator said it removed approval to undertake financial services from 176 firms last year. So that means that 176 companies that were operating with FCA approval, they had their FCA approval regulation removed because those companies have not carried on regulatory activity in the last 12 months as part of its use it or lose it approach. It's designed to protect customers and consumers who are misled about their level of protection. The FCA also continued to alert the public to scams with a record of 1,300 warnings issued over the past year, and revealed its contact center prevented £4 million being lost to scams in 2021. Furthermore, the regulator secured £5 million to be paid back to people who invest in companies that were not authorized to undertake financial activity, and a further £28.5 million was frozen due to FCA action to be paid back to the investors subject to the outcome of legal action. So the FCA doing its best to protect consumers from scams that are out there in the marketplace. Unfortunately, there are scams. Be careful out there. We've seen it before within not only peer-to-peer lending, also in the bond market, mini bond market, and in obviously cryptocurrency. So yeah, just be aware. Do your research. Do your due diligence. And the FCA is touting its protection umbrella forward for consumers. Here we go. This is a story from Mike Maroney, who's the COO at Just Us, a peer-to-peer lending company. He is saying that peer-to-peer lending is overtaking traditional banks in terms of customer service levels and also the speed of loan approvals. Now, that is one thing we know about peer-to-peer lending. And, some of us old school peer-to-peer investors might have a little bit of a sour taste in our mouths due to the companies like Lendy, Funding Secure, and the other companies that have gone out of business. But in reality, peer-to-peer lending still does solve a problem for two sides. It solves the investor's side problem of not being able to get any yield out of a savings account nowadays, and also solves the borrower's problem of them being pigeonholed by high street banks in the way that high street banks decide whether they're going to approve loans to businesses. They have a very, very, square box mentality where, and a lot of it's decided by computer algorithms and credit scores. So Mike is saying that, and this guy used to work for the institutional banking system, but he has said that before joining Just Us, he used to work for Santander, so he's got a lot of experience, and he was saying he's really found it a breath of fresh air to be working in the peer-to-peer lending space because of the speed of loan approvals and also the high levels of customer service. Obviously, I found personally that the levels of customer service has been really good within peer-to-peer lending, a lot better than some of the banks out there. But I've had some pretty good customer service experiences with high street banks too. For instance, I constantly have to call Barclays because they block payments to things like Coinbase, cryptocurrency payments. But every time they're very polite, they're very nice. So I haven't really got anything bad to say about Barclays customer service, but I know there have been some horror stories about banking customer service. So this guy is saying banking customer service has been really good. Sorry, peer-to-peer lending customer service has been good. He also says everything that we did in retail banking was driven by scorecards, computers, and credit searches, but peer-to-peer has always been far more personal. So what does that mean for us as peer-to-peer lending investors? It means that peer-to-peer is actually still a viable service and a good service, solving the investor's problem and the borrower's problem, which in turn could lead to growth in the sector, and hopefully new companies being introduced, and the existing company is also continuing to thrive. So it's a good piece of news. I like to see things like that. So here Mike says, after leaving the world of high street banking, he's described peer-to-peer lending as a breath of fresh air. So it's nice to see some positive news after all the crap that we hear about peer-to-peer lending. He also says, at the end of the day, retail lending is driven by numbers. In comparison, peer-to-peer lenders are very, very good at customer service. We can get a really good feel for someone's affordability once we have the data provided by bank statements through open banking. We can see what salaries look like, and we can see where we can support the borrower. Ultimately, it's peer-to-peer lending speed and efficiency that makes it so attractive to borrowers and lenders alike. So good stuff. I like that article. Shojin introduces first non-UK property loan. So they have making off-plan purchase of 20 residential units in Penang, Malaysia. Incidentally, I am trying to set up somebody from Shojin to come on the stream, because I find the company is actually talked about quite a lot, and I'm always interested in expanding, getting new company CEOs here on the stream. And we're also going to try to have a panel in the future, which will be a Q&A of about 3 peer-to-peer lending company heads or directors who would do a Q&A and just have a little chat. So that is work in progress, probably once a month or so. So again, Shojin making off-plan purchase of 20 residential units in Malaysia. That's a big move. Trying to go outside of the country. There's obviously some risk involved, but they must have a good idea of what they're doing. The project will be funded initially via an initial equity contribution of £855,000 from Shojin and its investors. And Shojin Asia and Shojin UK are co-investing another $171,000. There is an expected project time frame of 15 to 21 months, which will be determined by the rate of sales. The minimum investment is $5,000, and they are targeting an annualized return of between 27 and 38%, equating to a targeted return on invested capital of 48%, assuming all units will be sold prior to the completion of the site. So that's a pretty bold move. We'll see what happens with that. A little bit of debt information here. Personal debt levels have gone high in the UK, which is really a shame, but is very indicative of what I've been saying about the economy, which is that the economy is not good. Despite the media news and despite the stock market, this kind of news really says everything about really what people's situations are. Personal debt in the UK has more than doubled over the last 12 months, with the average Brit owing £25,879 in 2021, up from debts of £9,246 an average of 2020. That is not good. That piece of news is not a good piece of news. We are talking about almost 3 times triple debt from 2020. According to Money.co UK's annual debt index, 6 in 10 Brits are now into debt, excluding their mortgages. A third of the debt accrued last year was due to living expenses such as bills and food. The coronavirus pandemic accounted for another 31.74% in debt. So what does that tell us? Well, it tells us that people are using their credit to pay their bills and buy food, which is really, really bad news for it's showing that the economy is not in very good shape, which we've been talking a lot on this podcast, videocast, YouTube, live stream. So these numbers just keep on coming out and show what a dire situation the economy is in at the moment. Londoners are most likely to end 2021 in debt, with almost 3/4 of people in the greater London region owing money by the end of the year. So 72% of people in London going into debt. And then this one is for you, Mike. Southampton saw the highest level of debt per person. Southampton, with residents reporting average losses of £62,301. I mean, that is just mind-blowing. I don't really know what that means, reporting average losses, £62,000, but that's an astonishing amount. More than 3 in 10 Brits attributed their credit cards debt. They attributed their debt to credit cards, which is down from 34% last year. Personal loans represented 15.6% of last year's debt. So yes, not particularly good news on the debt front, but hopefully 2022 will be better and things will increase, get better. Not the debt. Hopefully people's savings will increase. 2022 saw a record $11.6 billion investment into the UK fintech space. Now, I want to mention this because of what's going on in the cryptocurrency markets right now. If you have any interest in that, you've probably been watching what's going on, and the poo-poo has been hitting the fan. So a lot of people are panicking, of course. We see sell-offs in the crypto space, but what I wanted to bring your attention to, and we'll talk about this a little bit later, there's a ton of money of investment going into cryptocurrency infrastructure by venture capitalist companies and other investors. So cryptocurrency is not going away. This is a temporary scare. This always happens. People have very, very short-term memories. If that were not true, Bitcoin would not have rebounded from its drops in previous history of when it was at $3,000 and then in the 20s, not too long ago. These things happen. So, but this news story says 11.6 billion invested into UK fintech. Fintech obviously doesn't mean just crypto, but talk about alternative finance too. Fintech investments in the UK increased by 217% in 2021 to reach that all-time high. Total capital invested in fintech globally reached $102 billion last year. I mean, get your head around that. The total capital invested in fintech globally, that's crazy. 183% increase in the previous year. The US alone has attracted $46 billion in fintech capital. And the UK, $11.6 billion represents 11% of all global capital invested this year, which is an increase from the 10% in the previous 2 years. It's an impressive number. Innovative Finance pointed out the latest research shows the fintech products are now being used by 8 out of 10 Brits, which is a huge level of market penetration. Sorry, I had to laugh at that. The data also found that female funding gap persists. Obviously, it seems to be more men than women. Only 9% of all capital invested is from UK-based female fintech founders. UK-based female fintech founders have only received just 9% of all capital invested. So we got to get some more money into that sector from the women's side of things. But altogether, very, very positive news. Okay, let us look at what is going on in the stock markets today. We saw the Fed release minutes yesterday, and it had a really crushing blow after market. I saw some really weird things yesterday in the stock market, especially with oil. And it was very odd because in the morning yesterday, I was looking at my stock portfolio and I started to take some profit on the oil stocks because I've been burned before like that. I just, it's never a bad thing to take profit. So I took a little off the top, some of the oil stocks, and then later in the day when the Federal Reserve of the US released their minutes, we saw these markets just completely go hit the poo. And I thought I was the smartest person in the world. I thought, wow, I finally got the timing right. But what happens the very next morning? Those stocks go right back up again. And in fact, some of the oil stocks have gone higher than actually when I sold 24 hours earlier. Which goes to show that market timing is absolutely impossible because I've once again proved that to be true. How I got it right one day and completely wrong the next. So now some cash sitting on the sidelines. Thankfully, I didn't do it in the trading 212 portfolio because I didn't have time to do that yesterday. I left things alone. But that turned out to be a lucky move. But we saw in the Fed minutes, this is a kind of summary that you can go read this if you're interested in what's going on in the economy. And I always say, look at the US as a good barometer of what is going to happen in the UK with stocks. And, you can see that today with the S&P is actually in the green, 0.2%, Dow Jones a little bit in the red, and then the FTSE in the red, about minus 0.8%, which I think will swing tomorrow probably into the green. We'll see. But if you read these Fed minutes, it's pretty interesting. What it's saying is that they are going to taper right here. Let me turn the highlighter on so you can see what I'm talking about. The committee decided to reduce the monthly pace of its net asset purchases by $20 billion for securities and $20 billion for agency-backed mortgage-backed securities. Beginning January, the committee will increase its holdings of Treasury securities by at least $50 billion per month and of agency mortgage-backed securities by at least $20 billion per month. What they want to try to do, what the Fed is trying to do, is to release its Treasury balance, which is about $8 trillion. They've got too much on their balance sheet. And where this is coming from is from their lovely little trading desk that the Federal Reserve has actually in its building, where they can hop on this computer and they can buy whatever they want asset-wise on the retail market, which is crazy to me. But what they want to do is they've got $8 trillion and they've been buying mortgage-backed securities and they've been buying U.S. Treasuries. And when those Treasuries mature, they go ahead and rebuy new ones. And what they're saying now is they're going to try to reduce this Treasury balance sheet by not renewing those maturities. So what happened yesterday? The stock market reacted, got scared, and the market basically panicked. Very, very. It was short-lived. Let's see if I can look at the chart. Yesterday, let's look at the chart. I'm trying to remember what day it is today. We saw this dip here. Why show me the S&P? It's not showing me the S&P. But we saw this dip here. You can see this peak point right up here, and then the dip downwards. It was very, very short-lived. Let's pull up one of the stocks that we tend to follow here, Laredo Petroleum. Look at the chart. Let's see. Let's look at the 5-day chart. This was yesterday. Let's see. January 5th. You can see we had this fall off right here. That's a big chart. So where's the 5th start? No, I don't want to subscribe. Yeah, so you can see this this kind of raise up here, which happened during the day. This is when I started to pull profits about midday in the afternoon. And then those Fed minutes come out here, and then boom, you can see that sharp drop off from all the way up here, 76 US dollars, down to 73. Then what happens the next day? Look at this after hour drop off right here. So we went from 73 all the way down to 70 US dollars. So I lost 10% of that oil stock following the Fed news minutes. But very next day, boom, right back up again to 77. So that's a 20% swing and 10% down one day, 10% up the next day, and then you see some little bit of volatility during the day. So this was just really shaken off very quickly. It just goes to show you the markets don't necessarily believe that this is a bad thing. But the Fed continues with this narrative that they're going to try to reduce asset purchases and reduce their balance sheet. So, we're going to see what happens with that. This could take months and months for it to implement, to have any type of impact. We just really don't know. But stocks have really shaken it off, which was very interesting to me because I thought this would be probably a downtrend that would last for certainly more than just a few hours, and it did not. Let's talk about first investment. What was your very first stock investment that you ever made? Now, for anybody that's been following financial thing myself for a while, I only started investing in late 2014, December. So that was 8 years ago. Now 49 years old, so 41. I did absolutely no investing prior to that. Aside of a couple of little things, I had no idea what I was doing. But my first real stock purchase was, let me pull this up and show you. I got a little presentation here that I made. My first stock picking investment, RDSB, Royal Dutch Shell. It was the B class of Shell shares, and in 2014, they paid a good dividend. I thought, can't go wrong, right? Shell, good company. The oil is certainly not going anywhere. So here's my actual purchase order that I looked at. This was in the 23rd of June 2015, where I bought a whopping 52 shares in Royal Dutch Shell for a little bit less than £1,000. This was through Halifax iWeb that charged £5 in commission. This was before I started getting heavily into Vanguard. But incidentally, looking back, this was not my first investment purchase. My first fund purchase was actually Vanguard back in 2014. But this was my first stock purchase when I decided to believe that I had some chance of becoming a stock picker, trying to pick out my own stocks. So we paid a little bit less than £1,000, and the price was 1,894p, which is £18.94 for that. And I ended up holding this stock for 4 years, a little bit less than 4 years, and sold it. This is when I knew that Vanguard was the way to go for me. I mean, I actually knew it way before that, but I watched the Shell prices. It's kind of inkling go up. You'll see this quantity here is a little bit different because I bought some more along the way, and then I also got paid dividends in the stock. And these numbers that I'm going to show you are not including any dividends. We're just going to go straight off that number of the 52 that I purchased. And everything is going to be like for like. But you can see here, we sold out at 2,390p, which is £23.90, which is great, right? I mean, over 4 years, we did okay. I thought I was doing well. So let's look at what the actual return was. It was 26.12% over the 4 years, which is about 6.5% a year. Now, that does not include dividends or tax, because obviously I had to pay tax on that. And it doesn't include any shares that I got in dividends. Again, I'm doing like for like here. So pretty decent. I mean, 6.5%. Looking back for the risk that I was taking, was it a good rate of return for the risk? Probably not, because by the time you pay out the tax, maybe you're looking at 6%. And on a single stock, 6% is pretty risky, having your money into one stock like that. But let me show you what else here. Now, I looked at the Shell shares versus what would have happened if I'd have just plunked that money into the Vanguard US equity tracker, which I also held back in 2014. Look at the difference here. Now, what I did is I showed the income class here, not the accumulation, because I don't want to show that compound of the dividend payment that you also get from the Vanguard fund, because I wasn't showing the dividend payment on the Shell shares. So this is the income class, which is actually priced, I think it's about £100 less than the accumulation fund that Vanguard offers. But you can see here the difference between the returns. Royal Dutch Shell, 26.12%. Vanguard, 80.96%. So we're talking 3.5 times better return on Vanguard. And you can see that from here, June 24th. Let me get my laser pointer out here. June 24th, 2014 is when we started looking at the Vanguard, when it was £219. I think I might have messed these numbers up just a little bit, but I should have done it from March of 2015. But you can see here we had a increase up to £397.57, which was a 80.96% return, which is way better. I mean, we're probably talking maybe more 75% from March of 2015, but way better than what the Royal Dutch Shell shares did. If we look at buy and hold returns to today of January 6th, 2020, this is even crazier. Today, Royal Dutch Shell price is £17.21, which is actually less than what I sold them for back in 2019. I sold for £18.94. So if we'd have held that from when I first purchased in 2015, we would be in the negative. It's right here. You can see what the buy order was. We paid £18.94. So if we held simply to today, we would be in the negative because the price today is only £17.21, whereas the tracker is at £640.29. So long-term returns, if we do like for like, Royal Dutch shares will actually be 9.13% in the red, and Vanguard, the equity fund, 173.94% in the green. That is why I have a smiley face here and a really sad cry face right here. Do little tears. Oh, yeah. Now, obviously, this is just one example of how difficult an inexperienced investor's decision is when it comes to investing, because back in 2015, I didn't have any idea what I was doing. None. But I knew Shell, and I think I did this with a couple of other blue chip, what I consider blue chip shares at the same time, were probably BT and some other big British companies. I haven't run the results on those, but I wanted to show you because this was the first investment that I ever made into stocks on my own. Now, I happened to get very lucky with the timing, obviously, and I thought I was a genius because I sold at this £23.90 point, but I could have very, very easily mistimed that. I mean, you can see right here in 2015 that huge decline. So I sold, I don't know if these charts are completely accurate, when I sell in 19, right up here. We were in June. We sold right, around this 2300 level right here. But look at this massive decline here in the drop off. And there's going to be people out there, of course, that will say, oh, well, I knew that Royal Dutch Shell shares were going to go in the red. I knew it was a bad company. They were having problems. But if you're an inexperienced investor, you're going to know that that is going to happen. I mean, I got just happened to get the timing very, very right on this chart where I sold almost at the top, not really at the top, was £27, but I sold down here at 23, which is a huge win for somebody who has no idea what he's doing. I just happen to have a gut feeling about Shell, and I sold it. So this presents the difficulty in stock picking and why I really harp on this channel about just index fund trackers are just easy, and it saves you from having to go through possible negative returns for years. I mean, you hold this for 2014, and we always talk about holding, right? How holding is the best way for stocks to get long-term returns. Well, we're talking about 8 years here. 8 years, a little bit less than 8 years. To get a minus 9% return for 8 years. If you had a ton of money invested into Shell and you just sat and held for those 8 years, you would not be very happy right now. So that, I just, again, want to reiterate how difficult it is to pick out shares. And obviously some people are going to be better at this than others. And timing is everything in the market. Timing is absolutely everything. If you happen to come in down here at £12, and you happen to get out here, you're doing really well. You doubled your money. But if you're a buyer and holder, and you happen to buy up here at £24, which is what some people did, and they saw this thing go all the way down to £9. I mean, that's crazy. You're going to suffer some emotional and financial swings. So I just wanted to show you that. Let's take a quick look at the Trading 212 portfolio. See how we're doing. We took a pretty volatile swing yesterday, but the portfolio continues just to stay around 15,500. Oh, we have 40 pounds of cash we need to put in. I wish I'd have done that yesterday, but didn't do that. We're getting absolutely battered on these crypto mining companies right now. The profitability of the crypto miners is suffering because of the price. Obviously, of Bitcoin has fallen a lot. When the price falls, they tend to hold their Bitcoin, and sometimes they sell their Bitcoin to pay for expenses, and that's been a struggle. We can see CleanSpark here down almost 44% in the red. The oil stocks have done really well to hold this up. Alibaba still in the negative 11%. Comstock Resources not doing very well, 19% in the red, which is going to hold. Diamondback okay, up 20%, which is a win. Hut 8 Mining no good, 11% in the red. Flex 8%. Laredo creeping back up, 51% in the green. We saw this go, I think we were at 25% in the green the last time we looked at this. We look at 1 week ago. We were down here in the 60s. So look at that volatility right back up to 75. So that continues to be very swingy. Lloyd's, look at that, popping over 100% in returns. Not holding much of that anymore. Don't plan on buying anymore. Facebook Meta still just meandering around. And then our big one down here at the bottom. Palantir, by the way, struggling. That's not been so good so far, but I still think they are going to be just fine. Vermilion Energy, 80% in the green. This is one that I actually sold off yesterday, partially to take profits on. That turned out to be a bad timing move because today that stock decided to take a move upwards. Let's see, we were down here. I think we sold, I think we sold about 12.80, something like that. And we're up to 13.79 today. So bad timing, but it's never wrong to take profits, ever. So that is going pretty good. Let's take a look at the cryptocurrency market for anybody that's interested in that crazy wild west form of investing. Bitcoin obviously taking a beating today, down 6.23%, 43,000 US dollars. I think it's a good buying point. Not financial advice, of course. I bought myself for the last couple of days. I bought at 46,000. I bought at 44,500. Watched it go down to 42 down here, but this will be short-lived. I expect cryptocurrencies to be very volatile for the next year, but to head upwards. And maybe we'll make some predictions next week for 2022 and then come back at the end of the year and see how close our predictions were. But you can see here the market cap of crypto has just been absolutely beat down. We were at $2.3 trillion just a week ago. Now down just a little bit over $2 trillion. But if you are interested in cryptocurrency, this is a great buying time because you buy when everybody else is panicking. That's the way to make money in this market. Some of these coins have just absolutely gotten beat down. Some of the coins we talked about that we like Avalanche, Ethereum still holding okay. Solana down to 153 US dollars. And where is our Matic? I really like Matic. $2.22. You can see this one has taken a beating over the last 7 days. So up here from 260. Get a big discount on that if you want. Right now around $2.26. So for everybody that's out there saying, well, crypto is dead, the Fed is putting a hurting on cryptocurrency. No, it's not. Crypto is not dead. Cryptocurrency will still continue to fly. This is just retail people panicking right now. Short-term panic happens. It's pretty normal. We want volatility in the cryptocurrency market. That's how we make money. Let's just show some of the news. Institutional Bitcoin broker NYDG, valued at $7 billion, has received a $1 billion funding round. These guys are a company that serves cryptocurrencies to other companies. I think they're more institutional. They're definitely not retail, but they are going to provide things like cryptocurrency services to other major companies. So Soon we could see banks, providing Bitcoin wallets within the banks that are friendly to them. Now you can see here, this is very, very interesting to me, but and I like this a lot. The funding round, and we're talking $1 billion. So if people think that cryptocurrency is dead and these companies, you think they would put $1 billion into investing into this cryptocurrency business? No, absolutely not. The funding round has been led by these companies that I've never heard of. But then you've got Affirm, which is a huge finance company and lending company, Fiserv, Mass Mutual, massive, Morgan Stanley, New York Life. So this is companies that are investing into NYDIG. And their mission is to embed Bitcoin wallets into anyone's applications, whether it be a bank offering crypto trading or a hospitality brand such as a restaurant giving customer Bitcoin rewards. And this is why I always say with cryptocurrency, we are just so early right now in what's going on. This is just the beginning of these implementations of things like Bitcoin reward wallets coming into people's apps and things like that. And this is the company that is doing that. Starting next year, America is going to see Bitcoin showing up everywhere in all kinds of applications. That's the NYDIG business model. Of course, once it happens in the US, it's going to happen in Europe and then globally. Tuesday's $1 billion raise tops crypto exchange. FTX's $900 million funding round announced in July. What else? Samsung is entering the metaverse, and it's opened a flagship store inside of Decentraland, which is a virtual reality world. So they have a store that they are opening inside of a virtual reality world. This is a major company. We're not talking about small business. We're talking about Samsung. So they see big value in things like the metaverse and virtual reality. You're so early into what's going on. There's an ad. What is this? And then we can see here DeFi Llama. This is a place that shows how much cryptocurrency is actually locked in for things like staking. So that's where you could take your cryptocurrency. You could take a stable coin like a USDC or a Tether coin and lock it up, and you can get a 6, 7, 8% interest on things like that, or higher depending on what the coin is. We have a total of just under $240 billion of cryptocurrency locked into these different markets: Curve, Aave, Lido, Instadot, Anchor, which, by the way, if you want to find a place to put money, you can put Anchor tokens, stake them, and get a 19% annual return on that. So not saying you want to bet your entire net worth on things like that, but it's a good way to get returns. So you can see $240 billion of staked cryptocurrency. And other news, this guy started a $1.5 billion fund. This was back in 2021. He wants to reinvent crypto for institutional investors. His name is Matt Zhang. They found that a lot of people are going to be implementing blockchain technology coming in the next year to 5 years. So again, you're not going to put $1 billion into a fund if you don't think there's a future in crypto. And then we talk about Coca-Cola here is actually, and I think this is a little old news, but it was interesting nonetheless. They're going to auction its first NFT collectible on International Friendship Day. So a company like Coca-Cola are also getting into the NFT space. This is just one of many different major corporations that will be getting into the NFT space. We'll cover NFTs in the future. But point being, a lot of movement forward for everybody that's saying, well, cryptocurrency is a scam, blah, 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 blah. No, it's not going away. And it's just the whole metaverse is going to keep on getting bigger. Look at what Facebook did, renamed to Meta. It's happening. And it will just continue to grow from strength to strength, which is why I continue to be very bullish on the crypto space. Not all of it. Like I said, we can look here. There is now 16,482 coins. Nearly all of them I would never touch with your grandma's money. But there are some good players in the space, and there is opportunity there, money to be made. We can see Bitcoin's dominance falling now. It's only 39.8% of the entire crypto universe, and Ethereum just under 20%. That dominance used to be in the high 40s and almost 50%. So we've seen that drop down. But again, I believe this is temporary and good things are going to happen. So again, hit the thumbs up if you can. It helps me out a ton. Thank you very much. I hope you enjoyed the content today. Look in your comments. I'm interested to read about what your first investment was. So I'm just going to kind of look through here and see what we got. Patty says, when my new stock market portfolio set up within a few weeks ago, dropped from $300 profit to a $25 loss, I cashed out 50% and retained the balance in cash. I hope you cashed out when it was high and not low. It's a good way to lose money in the stock market. It's going to take nose of steel to retain the cash on account in the current market, not to cash out and invest in LoanPad. Remember, when everybody else is selling, it's a good time to buy. It's where you make money. So Mike says Santander OEIC. So I don't know if that was your first investment or not. Euro Disney totally tanked. Yes. Microsoft and Berkshire Hathaway still holding. Stephen Hell's first investment was BT many years ago. He sold. John Day, first investment British Gas. Yeah, I think this is really indicative of UK kind of investment mentality. It was the FTSE 100, BT, British BP, BT. Remember, what was it? TSB, all those banks. Because that was what we grew up learning how to do, or some of us did. Crypto markets linked to the stock markets and inflation numbers, despite so many believing they were decentralized. No, I mean, you can look back and see that the crypto markets have always going to get hit by the stock markets too. It happened in 2020, and the difference is that it's just a different investment class that is not tied to, especially Bitcoin, is just not tied to anybody. It doesn't mean it's not going to suffer and people aren't going to panic. A lot of the retail investors who are in cryptocurrency are new investors, and they get spooked when they start to see movement. So it's always going to be linked. But the difference is you're going to see that volatility of times where you could see a drop of 60 or 70% in crypto. You're not going to see that in the stock market, but you could see crypto go up 3x very quickly. That's the difference. That's the decoupling. So when the stock market starts to run, maybe the markets do 2 or 3% in a day or a week, you're going to see crypto have the ability to do a lot more than that. My first shares were Share Save with East Midlands Electricity and National Grid. Yeah, I remember National Grid too. I think my dad used to hold that. Dave Allard is here from the Midlands. Fire's burning nicely. Nice to see you. Yeah, we'll definitely be looking at the Shojin soon. Pre-taper tantrum. Bitcoin's losing its market share, but it won't. I think it will come back. Just because of its value is depressed right now. Lawrence, have you ever considered replicating your investment portfolio with Warren Buffett and Bill Gates? No, it sounds terrible idea. I mean, look, I could do that, but it would probably bore the pants off of me. And if I was going to do that, I could just buy Berkshire Hathaway from Warren Buffett's fund. not really for me. Why wouldn't I include dividends? Mike says, well, I'll tell you, because I didn't have a way to track. That account that I had is closed now. I didn't have a way to pull those old records. I just had saved those couple of different trades a while. I think I saved that maybe 6 or 7 months ago, and then the account got closed. So I did not have a way to track those dividends on the shell. But I can tell you, it looked even worse if you considered like the Vanguard accumulation fund, which was priced a lot higher. What made Bitcoin drop below 45,000? Haven't been caught up with what's going on in the crypto market. It was the Fed minutes yesterday. People got spooked. Bitcoin has been struggling between this $44,000, $47,000 level for a while, and then all it takes is a bit of bad economic news or something from the Fed to spook the markets. Also some price manipulation going on there, but I'm not too worried about it long term. Evening, Alan. Welcome. Nice to see you. I did get I got an email from Ford Money saying they were bumping up their rate to, I think, 0.6%. Woohoo! An interest if you want to get a tiny little bit of a blip. I agree. Peter says, don't buy individual stocks, buy funds. It does not have to be trackers, but you need to look at the manager's track record. That can be dangerous. Neil Woodford, he had a great track record. I'd rather just buy index trackers and not have to rely on a human being making stupid decisions. Yeah, Buffett and Munger are completely anti-Bitcoin. Absolutely right. They are 100 years old. They don't understand it. No, nor will they. They're old school investors. I get it. It's like Peter Schiff. Darren said, my first investment was a bucket and a sponge. That wasn't quite what I had in mind. Brian said he's bought 500 pounds of Sol Engine cutlery sets and sold them for 2,000. That's good. Mark B. Hi, Lawrence. Happy New Year. Happy New Year to you, Mark. Glad you're joining us. Hope you're well. Do you see more pain in markets after the Fed's announcement yesterday? I don't. No, I don't. I think we're just going to see... I think the risk in the stock market is rising a little bit. You definitely can see that, but the Fed moves slowly, and these interest rate hikes are going to be small. So... And where else are people going to put their money? Here's the big question. If you pull your money out of the stock market, where do you put it? Where do you put it? You put it into crypto, you put it into property if you have enough, but most people don't. And then also the property market prices are just so high. Where are you going to put your cash? So I don't think we're going to see as much pain. I mean, certainly there's a correction that will happen. We certainly expect that. It has to happen. I mean, stocks just can't keep on going up forever. And we haven't had a natural correction for, if you take off March of 2020, which is really a black swan event, we haven't had a correction for, 7, 8 years? It's been a long time. So I wouldn't be surprised if the market would have popped and then go right back up. People are just going to keep buying the dips. There's nowhere else to put money. Vlad is here. Around March time, interest rates are supposed to be going up since April 2020. How high do you think they'll rise around that time? I think they'll 0.25%, maybe. That's probably it. Very, Very small amount. Neil Woodford started a new type of fund investing in startups, completely different what he'd been good at. Yeah, but this is the thing about like fund managers, right? If you say, well, I just want to invest in Invesco's funds or Fundsmith, the person running it can just have a complete change of heart and start doing something that they have no business doing, and then they put the customer's money at risk. And again, if you can beat the returns anyways with a tracker, which I think long term you will, why would you take that risk of betting on a fund manager? It's not worth it. Anyway, that's going to wrap it up this week. Dead on an hour. We'll see you. I think we have a guest on the stream next Thursday. Is it the 16th next week? No. Maybe next Thursday. If not next Thursday, the Thursday after. We're going to have a guest. And I will send out an email if you're not on the Financial Thing email list. Go to the website and sign up. We'll have a guest either next Thursday or the Thursday after. I should check my calendar. Let me take a look. We have, I don't know. Maybe I didn't put it on the calendar. Send out Q&A. I know we have a guest. I'll let you know who it is. I totally slipped my memory. We do have a guest next week, though. And thanks for everybody for joining. Again, hit the thumbs up if you can. Have a blessed week. Love each and every one of you. Thank you for spending your Thursday evening with me. If you have any questions or comments, pop them down in the stream or in the comments, and tell your friends and family about what we're doing here, and join the Discord. Get in on that holiday giveaway, which we'll be announcing next Thursday, and join the Facebook group if you haven't already. So anyways, we'll see you next week, and take care.